Today we have Rehan Ahmed and Rajiv Tumala from SGX and Rajiv Tumala from HSBC. And for Rehan and Rajiv's benefit, we have a collection of members for you today from the Fixed Income Steerco, the Post-Trade Committee, the FinTech Working Group, and the Tokenized and the Crypto Sub-Working Group. So a wide representation from our membership. And so Rehan and Rajiv will present to you today the recently launched white paper that covers the OLAM digital bond transaction of a couple of weeks ago. So they will share the first half an hour. They will share the background of the project, typical challenges in the Asia fixed income issuance workflows, how this transaction has addressed it, which stages of the life cycle they issued, some summary of learnings and next steps. So they will, so Rajiv and Rehan will take a half an hour more or less for their presentation, and I will leave plenty of time for Q&A. There's quite a number of people on the phone, so please mute yourself when you're not speaking. When you want to ask a question later, there's two ways. You can either drop your question in the chat box if you're joining via Zoom via internet. Now you can obviously drop that question at any time. I will read it out for Rehan and Rajiv, or alternatively, you can raise your hand and then I will ask you to speak and address your question just verbally. So without further ado, Rehan and Rajiv, I'll hand over to you. So Selina, can you share your screen with the slides? Excellent. So those that are joining by phone, the slide deck is in your calendar invite, so you can just follow there. Just quickly, I just want to let people know that at the request of SGX and HSBC, this session is also recorded, so people are aware, and we can share, and we'll share it after the presentation, so you can share it internally with those who were not able to attend. So I'll hand over to you guys. Thanks for doing this.
Great, thank you so much, Laurence, and good morning, everyone. Selina, if you can just move to the next slide, please. Okay, so today, as Laurence mentioned, we will do a 30 minutes presentation, which is a summary of the white paper and then adds a few more topics into it. The white paper has also been circulated. It's available on our website as well. But just in terms of the contents for this deck, we'll go through how we came up with this idea, what are some of the precedents of such technology being used in the bond market, most importantly, what are we really trying to solve within the entire issuance process? There's a lot of flows that we believe have resulted in efficiencies, but we'll zone in on a couple of them with some visuals as well. Then we'll get into summary of learnings, aside from the efficiencies that we've put out in the white paper, what are some of the higher level concepts that we've come across? And last but certainly not least, what's next? We've done a successful pilot in post-trade automation. What are some of the areas we'll be targeting next? Next slide, please.
You're on mute, Rehan. You have to unmute yourself, sorry.
Hi, better?
Great.
Great, okay. So if you just look at digital bonds as an umbrella term, it involves different technologies such as smart contracts, such as distributed ledgers. Essentially, if you look at that as a term, we've just tried to map out over here what the timeline of bonds of this market actually is. So in 2018, we had a very famous Bondi, a World Bank bond. There was a subsequent secondary trade on this bond in 2019. In 2019, we saw some of the European banks getting very involved in POCs. Santander and SocGen are two of the more well-known ones. And then in 2020, we just started seeing Asia taking the lead. The first deal was a Bank of China 20 billion RMB deal, an onshore deal. Then we started to see Thailand. There was a DLT-driven Toyota commercial paper issuance, and then Philippines, and subsequently government of Thailand bonds. So the use cases for Asia tended to be in the retail space, specifically for Thailand and Philippines. But then in September, when we announced the completion of our pilot, it really was zoning in on what a syndicated public deal, running a syndicated public deal on this technology looks like. So some ways in which are different. I think each of these pilots has their own unique features. But some ways in which we're different is we ran a syndicated public deal. There was no change in deal documentation for the issuer, the arrangers. Sorry, Selena, can you just go back to the slide? The timeline slide, please. Yes. In terms of currency support, we depend on our depository, which is Central Depository of Singapore. There's multi-currency support for such deals. And really one thing we're not touching on here is secondary liquidity. Okay, next slide, please. Okay, let's go back to our original thesis. We came together as partners summer of last year, and we formulated the project team in Q4. And really what we were looking at were, I'm going to start at the bottom of the slide. What are the 4 key pieces of tech that we thought could be used to upgrade a depository for the modern age? So the 4 key pieces of technology I'll speak about. One is ledgers, whether they're distributed or centralized. Second is tokenization, which is how do you create, for example, a bearer asset. Fractionalization is how do you break down that bearer assets into smaller pieces for distributions. A smart contract is really just a, sorry, can someone just mute? There's a lot of background noise. Thank you, much better. A smart contract, very simplistically, it's a self-executing contract. So if certain conditions are met, the action goes ahead. Atomic settlement is essentially it's an instantaneous settlement that bunches together a number of settlement instructions into one place. In terms of use cases, we saw the bond market as being a very obvious use case, given the number of steps involved over there. And also, we did not want to target, for example, the IPO and the equities market, just given it's at a completely different scale, it's got a completely different use case, but we felt the bond market was more manageable. Other assets that we saw use cases for, if this concept worked, would be certificates of deposit, commercial paper, basically something that targets high-frequency issuers. Next slide. Okay, so where do we fit in? This slide, the simple way to look at this is that we're focusing on traditional asset classes. Here we're focusing on bonds. We are distributing to regulated financial institutions. At least for right now, this is not really a retail play, but essentially we're changing the backbone for asset issuance and servicing over the life cycle of the asset. Traditionally, exchanges, many of them operate on legacy technology, which goes back in some cases to the 70s and 80s. This is really trying to reinvent the process at that layer. Next slide, please. Okay, so the important question, what are we really trying, what are the problems that we're really trying to solve? Selena, if you can just go down. Okay, so here we've just tried to break down a bond's life cycle very simplistically, right? So if you look at the left-hand side, there's a whole, the moment an issuer decides to come into the market, they appoint a syndicate of banks. The banks go through a book building and issuance process. This is typically done on platforms. And then by the time the bond comes to us, i.e. a depository, and in Rajiv's case, a custodian, really we look after the listing, we look after the client settlement, we look after the depository services, and ongoing services like coupon payments and redemption payments. And thereafter is secondary trading. So we just wanted to highlight in this slide that we are aware that there's problems there's pain points at every part of the life cycle, and some of those technology cannot really answer. But the area that we're zoning in on is really the piece in the middle, which is what happens once a bond has been priced, it's been launched. How do you make it more efficient, for example, for the issuer to receive their money quicker? How do you make it more efficient by removing the operational risk at the point of settlement? So some of the challenges, I'll just zone into them. We frequently hear from issuers, why does it take me so long to receive my money? T+5 is too long for me. We've tried to see how we attempt to make that more efficient. Paper trail, obviously from a legal standpoint, and also from a paying agent standpoint, we receive a lot of documentation from them to make sure a deal goes ahead. How can this be made more efficient? Reconciliation challenges, I will let Rajiv give a custodian point of view on this, and likewise for corporate actions. So Rajiv, if you can just zone in on some of the pain points you've experienced as a custodian.
Yeah, I think I'll also sort of expand the gamut a little bit and talk about, the arranger side, we tend to think that if there is no physical paper involved, the pain would be a little less. But if you look at a typical, book building process as well, again, multiple parties are involved. And I keep joking with Rehan that, it's not only the physical paper that is anti-digital. I would say emails, where there is no structured workflow, and sharing of spreadsheets across participants is also in some ways, ripe for disruption using better digital tools, and workflow or platforms like the ones that we worked with SGX come in to actually simplify that process across multiple parties. Again, if you touch upon the custodian part, it is about receiving the information, right? A typical public syndicated deal would have somewhere between 80 to 120 investors that the custodian for the arranger bank has to actually deal with. Sometimes there are standard mechanisms like Swift where instructions are received. Sometimes it basically goes on again on emails and spreadsheets, right? So that means that on the day of the settlement, there is a little bit of heavy lifting that are required to sort of ensure the information received versus the information that was fed into the depository sort of matches. There is a pre-matching cycle there. When you have 120 into, let's say, 3 or 4 ways of communicating to the custodians, that sort of gives you somewhere between 700 to 1,000 ways of keeping track of the information. And given that everything sort of gets compressed into a couple of days, the possibility or the probability of operational error sort of goes up. And that was one of the things that we tried to tackle. Reconciliation emanates from the fact that you receive information in many different shapes and then put it back into the repository system. On corporate actions, again, we did take a look at how many times the same coupon is calculated by varying parties, right, from the issuer, the paying agent, the depository themselves, investors, and their custodians. This platforms of this kind then sort of create a golden source of information that everybody can rely on, and therein lies the simplicity. You can also model some of the rights and obligations of the asset ownership, which I think we'll touch upon slightly later. But this is the beginning of what I would call software-defined asset networks, right? So we are at the cusp of creating asset networks that are slightly different in nature, again, using traditional securities. But the market's probably much better prepared now than, let's say, 3 to 4 years back to begin that journey.
Thanks, Rajiv. So I'll just end this slide by saying that we are very, very aware of the cost challenges that sell side has, for example, the large number of sell sides active in the Asia bond issuance space, some of the challenges in secondary trading as well, but this project was not really touching on any of those. Next slide, Selena. Okay, so this slide is just highlighting our design philosophy and very simply, what part of the process did we change? So one thing we're very keen to avoid is any system changes for the arranger banks, for example, or any system changes for the investors. We would simply abstract all of the efficiencies away and make sure the efficiency and the changes were actually done on our side as a depository and Rajiv's side as a custodian. So essentially for us, one of the key tenets is the best way to build adoption for this is to make sure, ironically, that the technology is actually invisible to the end user. So what we did is if you look at the diagram on in the center, we took information from the issuance process through our own channel. That channel allowed us to get rid of, for example, paperwork that a legal counsel would send us for custody applications. Once we had the set of information, the basic information we need to create a bond, we create a digital security. And the way the digital security can interface with, for example, paying agents, the way it can interface with custodians and therefore end investors, we find that a much easier infrastructure that can be built on top of. So essentially a digital security, you can do, for example, automated coupon payments on it. A digital security, you can do automated redemption payments on it. And for example, in the future, it can also replicate registrar functionalities, which today, for example, takes many days to get done, right? So some of the expected efficiencies we had, you'll see some examples of this later. One, we thought that the entire issuance process, basically how the settlement happens on settle date, can be reduced into one single transaction, which is the atomic transaction. It lowers the overall operational risk. It allows you to automate corporate actions that free up time for the paying agents, for example. As Rajiv said, is really thinking about building a single source of truth for everyone in the marketplace. Next slide. Okay, examples, improve flows. So I'll just focus in on two flows. One is very relevant. So this slide, I think, will be very relevant for legal counsel and listing agents. The second slide that I'll go through will be relevant for paying agents and settlement banks. So here we've just started to look at how security creation actually happens. And if you look on the left-hand side, today, for example, when a new issue has to be created within us as a depository, someone actually has to go in and fill in that entire Excel sheet that has, depending on the kind of bond you're looking at, anywhere from 30 to 50 fields to be filled out. So if you follow its journey, it goes into manual input. Someone actually enters that information manually into a system. It goes through a 4i check, and then maybe a day or 2 days later, the application has been approved, and you, for example, end up getting an ISIN. On the right-hand side, just getting away from the smart contracts and distributed ledgers, very simplistically, having this information available for legal counsel to input into a screen that they can use that has all of that data available just makes their life a lot simpler, because they can open up the screen, punch in the security, and unbeknownst to them at the bottom, they've actually started the process of the security creation themselves, right? So this is actually, I don't see this as much as a technology overhaul. It's really a workflow efficiency tool. But what it allows a legal counsel to do is to have a real-time interaction with the depository on security creation. Next slide, please. And here I've just tried to outline two flows at settlement. So on the left-hand side is what happens during a typical deal settlement today. And I do want to caveat this by saying that different depositories have different settlement flows. We're just talking about what is relevant to us here in Singapore. So what happens is, let's say an issuer has, let's say a deal has been priced. 5 days later, the settlement occurs. All the conditions precedent have been fulfilled. In our market, in the morning of the settlement, so I'm looking at the top left, the morning of the settlement, the arranger bank is going to pay the issuer. Let's say it's a 500 million deal. The issuer then gives us a confirmation either over email or by phone that they have received the money. This is usually done through the legal counsel. And then when our clearing and settlement cycle begins in the afternoon, the bonds are credited to the arranger. The arranger then passes the bonds on to the end investor through the custodian, i.e. HSBC. And then if everything goes according to plan, the arranger actually ends up receiving their money back by, let's say, 2:30. So from a pure arranger standpoint, one of the risks that you would have is you have paid the issuer, but you're receiving the money through the entire depository and clearing cycle later in the day, right? So we thought very hard about what is the kind of funding risk involved over there, for example. On the right-hand side is essentially a very simplistic representation of how we've improved it. So if you think about a network and there being 3 key participants in the network, i.e. the issuer, the arranger, and the investor, this can actually operate in a traffic light manner, in the sense that once the book runner is happy to go ahead with the deal, we are happy for the deal to be custodized, and we cite money within the investor account through their custodian, i.e. HSBC. This basically triggers a single transaction in which the money goes from the investor to the arranger to the issuer, and the security goes the other way around. So if you take the example I think Rajiv was mentioning earlier, which is, let's say you have 120 individual investors. Each of the investors has 2 sub-fund allocations to allocate this into. That's 240 different instructions that have to be put in, and all of them have to be matched on a per deal level. That is a level of reconciliation that we would do, and Rajiv would do as a custodian for their investors. So imagine all of this now does not need to be created anymore. So these 240 line items go away because the platform just auto-generates them. The reconciliation is already built in, and the entire sweep at issuance is just controlled by the arranger bank, the investor custodian, and the depository. So one of the other advantages over here is that this is not dependent on exchange timings, for example, right? And that becomes very important when you look at cross-border issuances. So, for example, the need for an Asian issuer to raise money from US investors, a US issuer to raise money from Asian investors. That is the advantage of looking at settlement from a deal perspective versus defined exchange settlement clearing perspective. Okay. Next slide, please. Okay, summary of learnings. So obviously the white paper goes into a lot of details on specific efficiencies we found. And we found efficiencies all the way from activities on the pricing date, post-pricing, listing, settlement, depository. So it's an interesting read. But just to highlight, if we were to zoom out and just try to categorize these efficiencies, what would we call them? First is that if you think about the Pareto principle, which is 80-20, for us, we actually didn't find that within this pilot. I think the issuance process is a complex beast. One of the studies we're aware of mapped out that there were 650 plus steps involved in a typical issuance process, a lot of them to do with messaging. And this wasn't so much about finding, the top 10 steps that save you the most time. For us, actually, we found out that each one of these shaves off time, money, efficiency within the process, but we didn't find a big silver bullet that is able to take away, to get rid of big choke points within all of these workflows. So that was an interesting observation. I think usually we operate in an 80-20 principle. We try to find the big roadblocks within a problem. But over here, just each individual step has a certain road to efficiency and a certain improved workflow to go alongside with it, right? Rajiv, do you want to add on some things from your custodian standpoint?
Yeah, I think, what it has also actually brought into light was how this particular technology has a potential to sort of shape some of the roles in terms of, there's always a big question mark around whether this technology sort of disintermediates, certain type of roles. And what we found out was that instead of actually disintermediating, the roles are probably important, but how we perform those roles will significantly change as we adopt, newer capabilities, newer technology, right? So what transforms is, the way these functions are performed rather than the functions, disappearing. And that also means that these functions can now focus on higher value added stuff for the clients. Custodians, right? So right now, if you look at what a typical custodian does, is they do intense data processing for, lack of better word. They take instructions from their investors, they convert it, they actually send it off to the depositories. There is a bunch of reconciliation processes that are going on pre and post settlement to ensure, all of that, ticks and measures to the control processes you have. But once you have platforms like this proactively pushing out the data to custodians, letting them know of their investors' obligations or their clients' obligations, and giving them a view into the potential cash flow that is coming out because of asset servicing, again, a lot of it powered by the platforms that the custodians are part of, simply they can focus then on higher value added work, that they can work with their clients or investors on. So that's where I think a custodian's role would, I would say that it would change from being the party that gets instructions or and passes on, being instructed party to being informed party, right? Being part of the network, that where they efficiently help disseminate information to the interested parties, and our party and are a key party to the operation of that particular network. That's how I see the role of custodians shaping up. And of course, on the arranger bank side, as Rehan was pointing to, right, they'll be upstream. You'll have sort of an open architecture that can easily consume the data that is emanating from the book building platforms. While we did not touch upon, these network can also be downstream hooked into distribution platforms that focus on retail or accredited investors to bring down the ticket sizes. Again, you don't add any inefficiencies because of the way the platform actually settles the transactions near real time. The other important aspect I think for us was how much investors value the fungibility between analog assets and digital assets, and that particular bridge being operated by the depository sort of aids adoption, so that we don't force all the participants to migrate at the same time. It would also give you a headroom for the regulation to evolve, because everything eventually by investor choice can also be represented as a dematerialized asset versus mandating everyone to sort of get on to the tokenized assets bandwagon. So that optionality is very important from an adoption point of view. And Rehan, that's something that had come out from our numerous interactions with investors and issuers as well.
Thanks, Rajiv. Then moving on, when you think about that principle of a lot of micro efficiencies across a large number of pain points and problems, we started thinking about whom is this most relevant for? Is this relevant for the issuer who taps the market once every 3 years? Or is this really relevant for an issuer that, for example, taps the market maybe every week, even if it's a short-dated paper market, right? So, one of the key findings we had over here is when you think about Asia dollar bond issuance, that's running in the sort of 400 to 500 billion a year number this year. People tend to forget what the short-dated market size actually is. So interestingly, we found out that short-dated markets in Asia, if you look at dollar, the CD market, for example, in Asia is around 275 to 300 billion of issuance a year. So we actually found that application of these efficiencies is also very relevant for short-dated issuers. The high-frequency, high-grade financial issuer that has come into the market, call it every month to do a CD, or they're running a CD program, for example. These really tend to add up for them. Third, I'll get into paperwork. I think a lot of what we did in the project is trying to read the documentation better. So for example, when we get documentation from a paying agent, when we get applications from listing agents and legal counsel, how do we actually take that data in a lot better? But interestingly, we also found out that there was some feedback from lawyers around if the platform itself has all of the data at deal launch, why can't the platform itself be involved in the creation of legal templates, which is one of the themes we'll explore in our next stage. Cross-border issuance and distribution. We have a lot of color of this from secondary markets, but obviously, for example, North Asian investors investing into high-grade US issuers, it's a very relevant theme, but also the time zone doesn't really work for the Asian issuer to do it the other way around. So I think just removing the chains of having predefined clearing and settlement times, I think is more relevant for cross-border issuances. And efficiencies for custodians, I think Rajiv's just gone through it in a bit of detail. Next slide, please. Okay, so this section is around what's next in key trends. I'll start off with key trends. And I'll speak about key trends relating to the pilot that we've done. And they really come into three broad buckets for us. The first is what different exchanges are doing globally. The second is what is a right incentivization and adoption model. And the third one is a digital assets piece. So when you look at exchanges globally, we're starting to find more centralization roles played by exchanges in fixed income infrastructure. So three good examples to point out over here. The first one is LSE Flow. This is an issuance to settlement workflow platform by the LSE. They've done this with a platform partner called Nevora. The second one is Luxembourg Exchange. They are an investee in Origin Markets, which is a CDCP platform. Again, they're trying to build an end-to-end workflow targeting, for example, T+0 settlement for short-dated paper, right? Very much in line with some of our findings earlier. And last but not least, the Swiss Exchange 6. There is a digital primary platform in place, which right now focuses on data, but is looking to expand into book building and syndication workflows, right? The second theme we find is, dealer participation. It's really about building a consortium. It's about adoption, building adoption through having skin in the game. A very good example of this is Direct Books in the US. I'm sure there's some listeners from representative firms. who announced they went live with a data product last week and looking to expand further. SIX deal pool I'd mentioned earlier, again, given SIX's structure, a very natural evolution for them. And then you have some EU-wide programs such as the debt distribution initiatives, which targets the settlement and clearing workflows along with the CSDs as well. Okay, digital assets just very broadly, let's split this into Asia and Europe, very different themes that we're seeing. First, Asia has been on a tear in 2020. When you look at scriptless issuances, paperless issuances, where the details are recorded in a ledger, Thailand and Philippines have very specific use cases for retail distribution. So we see that getting stronger. We are also, we're also looking at what is happening in Germany. There's evolving securities law around a new securities framework for purely digital issuances, right? And obviously, we probably expect this to be very relevant for high-grade, high-frequency issuers. Going back to my earlier point about this being relevant for shorter-dated products, right? CBDC, central bank digital currency, obviously for any kind of digital asset, this would be a key catalyst. Doesn't really exist at a wholesale level for any of the markets that we know. Obviously, there's pilots being run in, for example, Hong Kong and Australia right now for wholesale payments. But this would be a key catalyst in the sense that it will allow for the interaction of digital assets a lot better, right? So the first settlement we're aware of that is done by a sovereign digital currency, CBDC, was in France. And I believe this is in May of this year. And Euroclear, we understand that they're working on, again, DLT-based settlement for the short-dated securities market. Next slide, please. Okay, so just wrapping up, as far as what we've done, it's been very much alongside post-trade automation. We wanted to zone in on an area that we're very familiar with, but obviously throughout our studies, a lot of other areas and efficiency opportunities have come to light, right? So how do we see the future for bond infrastructure in Asia going forward? So here we've just split it into upstream and downstream. The downstream piece is very much the focus for this stage of our pilot. Essentially, we try to replicate what happens, for example, at the point of issuance, at the point of settlement, coupon workflows. And this is infrastructure that we will be building upon further over the coming year, basically strengthening that infrastructure, adding more functionality in there. But also, if you look at the left-hand side, the two boxes in green, really trying to add in more settlement bank options around that, right? So today as a depository, for example, we have 8 settlement banks. But how do we add more settlement banks into this kind of an infrastructure? Then looking at new multi-currency payment networks that are coming up. And there's a few of these examples locally / regionally, is for them to be part of this new infrastructure as well. But essentially, you want to get to a point where, from a regional standpoint, the issuer has a certain amount of comfort with you, but maybe you depend on the international securities depositories for distribution. And we believe there's a place and there's a need for that. Right? Upstream is really where we're going to be focusing in the short term. And first off, it's been very encouraging to get feedback on our white paper. We've had a lot of feedback, especially from regulators, law firms that have come back to us and asked us to really think about what does an issuance framework look like in the future. So let me start by talking about the box at the top, which is the issuer menu. So today, issuers have the choice to go through a regular process, a BAU process, well-tested, well-run. But what if in the future there's an option to do a full security electronically? So for example, there is no paperwork involved, but the security creation, the price discovery is done solely on a platform. In a way, it's very analogous to the concept of an electric vehicle, right? In the sense that the way you interact with the vehicle is a completely different mechanism. The way the vehicle moves forward is a very different mechanism. It's trying to bring in some of that. Now, I think one of the key changes that'll be required to support a new electronic securities framework is the legal and the regulatory side. And these are tracks that we are in early stages of looking at. But fortunately, our local regulators and our law firms have been very supportive in looking at this. The part in blue in the middle is really around, the role of an issuance platform is a very key role. And today, when we look at bond issuance platforms, for example, some of the incumbents in the marketplace, they just tend to focus on one part of the workflow. And we see the opportunity for a wider ecosystem. So if you look at an issuer, you look at an arranger and the investors being involved in a platform, it makes complete sense, right? But we have a broader view in the sense that the listing agent, the legal counsels, the paying agent, and the custodians where needed should actually be part of this ecosystem. Because one of the core problems is that at the point when a bond is being issued, priced, etc., not everyone has access to all the same information at the same time. It's a combination of email messages, chats, runs, etc., that are updating investors and all the participants on deal progress, but there's no unified source. You can power this unified source in the back end using a ledger, but really what everyone cares about is having something tangible to look at and say, okay, where's the deal here right now, right? Where has a deal been launched, priced, etc., and making sure everyone involved in that chain is aware of it. So short summary, we are going to be focusing on issuance platforms next, trying to connect issuance platforms, building partnerships with them, trying to connect them into this infrastructure, and whereas making sure that the end distribution of the deal through connectivity into ICSDs remains unchanged, right? So the issuer has the full opportunity to distribute their bond as needed. Okay, next slide. Okay, so I think we just did manage to do over 35 minutes. That's all we had to share. Happy to take the group's questions.
Thanks, Rehan. We have one question in the chat box. So just a reminder, so you can either type your questions in the chat box or just unmute yourself and ask them or raise your hand. Just so you know, we have muted some people who dialed in over the phone because of some background noise. If you have been muted on the phone and you want to unmute yourself, please press *6 when you're on the phone. Rehan, we have one question already in the chat box, and it's really, so you mainly talked about the issuance process so far, but that question is around secondary trading and how this process, how do you see this play out with traditional secondary trading platforms such as TradeWeb and Bloomberg or over the phone?
Sure, yeah, it's a great question. So I'll just refer to a key point Rajiv mentioned earlier is that for the end investor, they want to make sure that there's full fungibility between the paper bond and the digital bond. So one thing we're not out here to do with this project is create a whole new secondary market. So once a bond has been created, it gets an ISIN, and that security can be traded OTC or on any of the platforms. We're not looking to change any of that. We're simply looking to change how the asset gets serviced, how coupons get paid, for example, and how the bond actually gets issued in the first place. From a secondary standpoint, it's not that this bond can only be traded on a digital exchange or it can't be traded on one of the platforms that is mentioned here. This is really just about create the security, give it the identifier and service it wherever it's traded does not need to change. So this platform doesn't need to work with these platforms. We are completely agnostic to where the secondary trading occurs.
So just to add to Rehan's point, right, while platforms like this would potentially facilitate much more shorter settlement cycle, our engagement with the industry in general has basically pointed to the participants having a flexibility for faster settlement, not being, forced into having a faster settlement. So one of the unanswered questions we have on the back of the project is if there is a faster settlement cycle and and a usual settlement cycle, how does the price discovery change for a potential bond that settles immediately versus in 2 days? And we don't yet have the answers, but there's been some wider discussions which Rehan and I have been part of, where I think majority consensus was that they would like to have the optionality of a shorter settlement cycle, but not a mandatory one.
Yeah, so maybe I'll talk about the holy grail of settlement, and sorry to digress a little bit.
A little bit.
From a technology standpoint, everyone's very excited about T+0. So we actually found that's simply not possible. So maybe for very simple transactions, one issuer, one investor, maybe it works. But given that fund managers, for example, have to sub-allocate to their funds, and some of the paperwork, for example, the registration, the ownership, you may have a digital solution to it in the future, but it's not quite there today. So we actually found that T+2 is probably I think looking at the kind of participants that are involved in a typical syndicated public deal, we think T+2 is a much better timeline to target for.
with the current payment infrastructure in place, right, Rehan? There
Yes.
seems to be a bit of a constraint from the payment side as well. So again, banks like ours will definitely have our own payment solutions that can plug into distributed ledgers. But I think, payment has to work across at a market level. For that,
Yeah.
we need the national institutional payment networks to sort of become a lot more real time. And there is a lot of discussion there, right? It's not that they're not yet started at all, but there's basically a whole lot of discussion currently going on. But we do think that any improvement which is currently being spoken about, which might happen in the next 2 to 3 years, is definitely a prerequisite for much shorter settlement cycles in the market.
Agreed. So I'll just close that point off by talking about our design philosophy. This is not about creating a whole new market structure that we have to redo the adoption for. This is looking at where you can make things more efficient for the existing market structure. So yes, to Raji's point, we will be led by some of the changes in the wholesale payments network infrastructure as well.
Rehan and Rajiv, this was an excellent presentation. Thank you so much for raising our understanding of the possibilities in the future for this. If I understood you correctly, you believe that the most relevant use cases are those regarding high frequency issuance. I don't know if I caught that correctly.
Yes.
So
Yes, correct.
I'm wondering, just looking forward, what are some of the other asset classes or products that you might be looking at to expand the universe? And one that I'd like to get your thoughts on is the listed warrants market. At least in Hong Kong, it's currently treated along the same lines pretty much as just regular corporate IPOs. But that we feel that that's probably not the best approach given the high frequency of issuance. So would that be a great next use case? And if so, what was involved in terms of getting this infrastructure built for fixed income? If an exchange were to take the structured warrants market and to apply the same level of digitalization, how much work is that? Thank you.
Sure. So let me just take a question on other asset classes. So one of the slides we spoke about was very early on in the presentation was you look at bond issuance and asset servicing, and then you move on to CDs, CPs. So, I think 9 months is a very long time in this market. So actually we're looking at 3 other use cases right now. Let me talk about them, then I'll get into how much work they are to actually build out. So the 3 use cases we're looking at, one is around ETF redemptions. There's looking at what are different redemption workflows available that maybe the traditional legacy depository infrastructure just doesn't support today. It's not that it supports it with inefficiency, it's just not there. That's one. The second one we're looking at is we're looking at carbon offsets and trying to see, because right now we're talking about cash settlement and bond asset servicing. It's really how do you start thinking about a clearing infrastructure for a completely new asset class whose market structure is still being defined, right? And third, you just want to look at, one of the points Rajiv touched upon were digital exchanges. And we see this coming to market sooner than expected. And traditionally, when you say digital asset exchanges, everyone thinks about crypto. And I think there's enough digital asset exchanges out there, but more and more we're starting to see these kind of exchanges have a retail base that is sticky, that is loyal, but they want access to yield-based instruments. So starting to think about how one keeps their role as a depository, but is able to service a whole new kind of participant. Because in our market structure, they'd be considered an intermediary or a broker, right? But how do you support them from a tokenization standpoint? So these are the 3 key themes we're seeing coming up. I think the build for them is, okay, I don't want to say something controversial, but the toughest part actually is probably not the build. It's coming down and being able to list what you want to do, right? The build is actually, there's enough people out there who can code in Java. There's enough people out there, especially nowadays with digital assets modeling language. I think that depth is growing. It may not all be based in Asia. we had a very virtual experience building this product across Singapore, Hong Kong, Poland, Hungary, a little bit of Italy, and the UK. And by the way, this is pre-COVID, so we designed it in that way. I actually find the tougher part is mapping out, for example, those 650 individual steps in a bond issuance. Right. Okay, so I'm just taking the questions over here, looking at the chat. You mentioned
maybe I'll
yeah, please.
I'll touch upon the build bit a little bit, right? So why is Rehan saying that a build is not the most difficult part, right? So technology, as we all know, it's an enabler. We touched upon technology being invisible as well to the end user, right? You don't really care whether it is written in distributed ledgers or some other modern tech. And when it specifically comes to technology, right? So there's an amount of maturity that is currently happening in the blockchain space. It's becoming increasingly modular. That means that you have multiple options. You don't need to sort of go end to end with one single provider. They are nicely talking to each other. Interoperability across the various components in that technology stack is becoming more clearer. Some kind of at least agreement across different component vendors is coming through. That means that you can assemble a stack and do a bit of working with banks like ourselves or exchanges like Singapore Exchange, focusing on the business application side of it and worrying less about the implementation aspects, right? There definitely our own technology experts will take care of it, but increasingly you can write much more meaningful business applications on top of the stack. And that's where your questions on warrants is like, how can you focus on that business problem to you using this technology becomes a lot more relevant. And crypto, interestingly, what it is showing the rest of the ecosystem is you should basically treat them as sort of a minimum viable product that sort of tells you how something of value can be transferred easily, how can it be managed, and how can it be serviced. And how do you sort of take those learnings out and apply to the traditional securities that we know of and we all understand. To me, this world is basically a world of asset-backed tokens. And there is actually a real asset behind it, and how do you sort of model its behavior using the same constructs and capabilities of the digital assets. That's where I think the bridges are forming, and I would say that 2019 and 2020, if we look back, maybe 3 years from now, would be the years where sort of technology became a bit more mainstream in representing traditional assets that we know.
Great. Okay, I'll take this very good question. And this is around, how do you take the responsibility of being a golden source, right? What if there's coupon payments that you're looking to improve, what are some of the learnings you've had over there? I would actually say, we're used to that as a depository, right? People do look to us as a source to calculate income proceeds. What is actually very tricky is new bond structures that are coming up, right? And so if you look at the OLAM deal transaction that we ran on our platform, it's a vanilla bond, and it's 5.5-year life. They're fixed rate coupon, easy to do. The moment you start adding complexity into this, such as, for example, having step-up coupons, right? Floaters are not something that are, there's not a huge market for floaters in Singapore, and of course, there's floating rate issuances in dollar. But these are things that we don't see this being a ledger issue. We actually see this being an analytics issue. So how do you, for example, how do you support a step up at a certain date? These are details we haven't modeled yet. So the platform works really well, again, for certificates of deposit, because it's bullet payment, right? It's a platform that works well for fixed rate notes, right? But I think as we enhance the platform, so one of the examples that Rajiv and I have been looking at is perps. Just how do you support perps that have step up, step down, future cash flow schedules? These are things we need to build in from an analytics standpoint, but the responsibility of ensuring the income proceeds calculation is correct, it's something that typically sits with us anyway. So it's something we're very used to.
It's Philippe here, Rehan. Probably question for me is basically, how do you foster the adoption of such solution? But more importantly, I mean, how you make sure that these processes are harmonized and standardized enough so that it allows a seamless integration into upstream and downstream processes?
Sure, great question. So downstream, I would say our design approach is the end user is invisible. We actually don't ask them to set up any new infrastructure. So you think, let's take the example of an investor, right? If an investor has access to a security through their custodian, i.e. HSBC, that interfaces us into a depository, and let's say one day we decide to change processes within our depository, but the settlement still remains at, for example, T+2 in secondary. It doesn't really make a difference to the end investor, right? They'll just say, oh, it's T+2, it's still T+2, maybe in the future it's come down to T+1. What the investor will always worry about is just making sure that they don't have to do additional tech work, and they will depend on the custodian, i.e. Rajiv's firm, to make sure that interface works correctly. So in a way, our advantage is that we've completely cut off, there's no need for any client to interface into this technology, which we think is quite powerful. The second piece, which is the upstream platforms, I think that is where the integration challenges come in, for sure. But if you think about bond issuance platforms today, they need to be well plugged into the sell side, for sure, because they're arranging these deals. On the buy side, I think the integration is a little simpler, right? Because they may, for example, get their trade confirmations through other systems that are already integrated. Typically, the buy side is there's not a lot of examples of bond issuance platforms being connected in there. So I'd say it's a little bit easier because the number of dealers in Asia is quite manageable. The number of law firms is somewhat manageable. And that's the kind of presence you want to build on the platform. And the beneficiary from a data standpoint should be the investor, who may or may not care about full STP into their systems, right? So that's the broad design approach.
Thanks.
And also, right, Philippe, the fact that you start off with a regime where there is fungibility in asset representation, right? You're still supporting the dematerialized assets in their current form and the depository providing the bridge, so that custodians are, on the mark to say, okay, depending on the investor preference, you can sort of hold it in either form. Sort of gives you it removes any kind of liquidity risk you have. And Rehan basically mentioned this as a cookies in a isolated island, where you are forcing investors to either participate or not participate depending upon their liquidity risk preference, right? So
that's the feeling we've seen so far.
Providing, yeah.
Exactly. So when you look at digital exchanges coming out here, and there's many global example of new digital exchanges, they want to automate all parts of the workflow, and it's great because they're starting from a clean sheet of paper. But the adoption is exactly what you're pointing out, Philippe. The adoption for that is so challenging, because imagine the global institutional fixed income investor base is around 2,000 plus clients. Right? 2,000 plus clients. Rajiv is around 80 plus custodian banks that use sub-custodians. If you go and try to build adoption at that scale, it's just impossible, right? Especially for a global asset class like fixed income. So we actually started off with, we taught a lot about the approach to avoid exactly what you're mentioning.
And to follow up, right, can this new parallel infrastructure that comes on board efficiently over a period of time, not immediately, demonstrate efficiencies in a very credible manner? And you need scaling, you need more banks to come and participate, but that's where I think it will be an iterative approach to demonstrate efficiencies, and from there you sort of get credibility, and then you do more changes. So it's going to be a journey, right? I don't think it is, okay, tada, we created something new, everyone migrate. I don't think it's going to be that kind of an approach.
Yeah. Which I think was probably also linked to the interoperability with the platform with existing ones, I guess. Exactly. And we've seen that we've seen that in payments, and I guess for securities you'll see exactly the same. People that have an infrastructure, there are infrastructure out there. How you make sure you're using the existing one and plug it into the new ones to leverage the efficiencies of the new models.
Sure. I will just add in 2 points, a bit of a sell pitch from me. So first, Lyndon, thank you for your question on warrants. We'd be very happy to see what we see and do what we can do to support warrants. Please feel free to reach out to me post. The platform itself is designed to be modular from the get-go. The second one is a similar message to Mark, who's asking about issuers in Hong Kong. We would be very happy to support issuers in Hong Kong on the platform. So happy to share my details, and please get in touch if need be.
Great, thanks, Rehan. Any final questions from anyone? There's no more questions on the chat. Any questions from the people on the phone? Okay, if not, thanks very much, Rehan and Rajiv, for this extremely informative presentation. We had 100 people on the phone, so that's that proves there's the amount of interest in this topic. So thanks very much. We will be sharing your details offline with participants. The session is recorded, so we will be sharing the recording link so people can send it around internally as well. So we'll bring this session to a close. Again, thanks very much, Rehan and Rajiv. And have a good day. Bye-bye.
Thanks,
Thank you very much. Thank you.